payroll sending some pretty mixed signals, to be honest. The total number rising less than the expected 136,000. Meanwhile, wages grew at their slowest rate in more than a year. Still, the unemployment rate fell by 0.2% to 3.5%. That's the lowest level in half a century. Larry Kudlow, National Economic Council Director, addressed the numbers a little while ago.
I think the economy is now in a turning zone, and I think we've had a soft 2 quarters, but I think now we're going to be moving into a much stronger economic story.
Larry Kudlow, thinking things are going to turn a little bit more positive from here. Does our next guest agree? Erik Nielsen, UniCredit Group Chief Economist. Thoughts?
No. Yes, I have thoughts, but I disagree.
Yeah.
No, I think the odds are overwhelming that we are seeing the beginning of the slowdown in the U.S. We are running out of the fiscal stimulus that we got that kept us artificially high. And we see all the survey data, also the labor market data. They were not terrible, but they're weakish, right? We have long had a forecast of a mild recession in the U.S. mid next year. Maybe mid is a little bit early. Maybe it's the second half. This is what we're debating now inside in my team. But the chance that he suggests that we are on an up again, I would bet happily my money against that.
What changed this week? We knew that manufacturing was having a tough time. The manufacturing ISM Tuesday didn't really change much in many people's minds, but it was still a very big miss. That put together with the fact that we had some bleed across, maybe from manufacturing into services, just seems like in aggregate to have completely changed the perspective on the US economy.
Yeah, I mean, so markets always sort of tend to be a little bit black or white, right? But you characterize it, in my opinion, exactly right. We have had a very weak manufacturing sector in the US and globally. In some countries, they're clearly already in recession in manufacturing. The big thing we have been looking out for is when does this shift also to hit services and to households. Households have had a good time so far. Confidence indices, particularly in Europe, particularly in places like France and Spain, very high, very, very strong. But what we see now in the US and in Germany are the first signs that the manufacturing crisis is starting to hit services. And that starts to get you nervous, because if that hits, then probably we get households also down the line.
Erik, will the Federal Reserve protect us from a recession or even a severe slowdown?
No, that's impossible. I mean, we haven't, unfortunately, figured out yet how as a policymakers, haven't figured out yet how to avoid the cyclical sort of ups and downs in life. But they can cushion them, and they can delay them. And I would suggest that if we end up changing our forecast of a U.S. recession second quarter, third quarter next year to a little bit later in the year, it's precisely because the Fed has been earlier out this time than they have before. And while we don't think they're going to cut in October, the numbers today were not quite weak enough for that. We still think they're going to end up cutting 3-4 times more. Not far off what's priced sort of on the media or some months out, but a lot more than they say with the dots.